Hello, Business 330 students, this summer term 2021. Again, this is Professor Hassey. This is our week one lecture video. Again, every week we have two videos, minimum of two videos. The introduction video, which is posted over the weekend prior to the work week, which our work week goes from Monday to Sunday, where all graded work is due every Sunday. And then I post on Monday or Tuesday, depending on my schedule, a lecture video of the topics of the week. Again, this is an asynchronous class, meaning there's no class sessions where you come into Zoom or you go into a classroom on Zoom. This is an online class, but I will post lectures during every week going over the material. Then it's up to you to review the material and do the work. I have a review session every Tuesday evening from 6 to 8 p.m. where a student can come online on Zoom and ask me any questions or any concerns they have about the material. We also have a discussion forum where you can post questions during the course of the week. You can email me and you can text me during the week with any questions. But again, this is an online exclusive class. So you don't have to come to class. If you have questions, you can come to the review sessions or post questions to the various platforms and watch my videos every week. The videos are posted in the individual week sessions and also at our YouTube playlist that you have access to for our class. So that's our program. That's what we're doing tonight. I'm going to go over the first two chapters of material in the text and also explain our discussion post for this week, which is due on Sunday, June 13th. All right, so let's begin. Welcome to Business 330. Business 330 is a study of corporate finance. And you can see it on the screen here. It's how companies, corporations, sole proprietorships, partnerships obtain capital, money. Remember, in our capitalistic society and around the world, there are three legal ways to get capital. You can make a profit, you can borrow it, and you can have investors invest in your company. Profits, debt, and equity are the three ways of getting capital in our system. And that's basically what we'll be studying, how to get this capital. Corporate finance is important to the management of a company because the knowledge of capital budgeting, capital structure, working capital provides for effective decision making if the corporation is to maximize profits and stay competitive for future success. In other words, the capital is money, cash. You use capital to acquire assets to produce your product. And then you take in cash in the form of profits and cash flow to pay back the investors in your business and continue the business to grow. That's what corporate finance is all about. Chapters 1 and 2 are introductions to this class, explaining the definition of finance in chapter 1 and the definition of the financial markets where you go get this capital, and of which you're going to be practicing a little bit of the capital markets in your portfolio selection over the course of our term. There are three finance principles that are highlighted in our study: the investment principle, the financing principle or decision, and the dividend principle or decision. These three principles are a way to maximize the value of your firm. And that's basically the definition of finance: to maximize the value of your company. In other words, make more money, increase the stock price, reduce your debt position, maximize the value of your firm by investing in assets that return a principal, return in the investment over its cost, which is what the hurdle rate is, the cost of money. If I went out and bought a car today, I would go to the dealership and say, hey, I want to buy that car. How much is it? $50,000. Okay. I'll give you $10,000 of equity, my money, and then I'm going to borrow the rest of the 40,000. So they run my credit report and my car loan is going to be at 3%. That is my cost of capital. That is my hurdle rate. The 3% they're charging me to obtain the automobile or the asset. So you want to have an investment principal in a corporation that exceeds the return off that asset over the cost of the money it took to acquire that asset. That's an important principle of finance. A second one is how you're going to finance your assets. Remember, there's three ways of obtaining capital: profits, debt, and equity. If you're not making any profits, you're going to have to figure out debt and equity. What is the mix of that debt and equity? How much are you going to borrow? How much are you going to ask for investment from investors? And then there's the dividend decision. How do you return those profits, hopefully, and that return that money back to your investors? It's pretty easy with debt. You pay them interest, and you pay back the principal. That's the dividend decision for debt. But for stock, it's a little bit different. You can pay out in cash dividends. You can pay out in stock dividends. You can pay out in stock splits. You can repurchase the stock from the investors. And we'll study all these methods in our class. All in the context of three basic types of organizations in business: the sole proprietor, which is a one owner business; the partnership, which is a group of multiple owners of a business; and the one that we'll be studying the most, the corporation. Corporations are the greater area of business in the system, in our system. Why? It's easier to get capital. The liability issues are lessened. More access to capital for corporations. Why? They have more collateral. They have more assets to make it less risky for investors to invest in them. Partnerships and sole proprietorships are run by individuals. Corporations are run by a management team, but the ownership is in the stockholders of the company. We'll be studying corporations in our class. And the reason why we find capital is to grow. If you don't grow, if your company doesn't grow, go to new markets, create new products, become more efficient, your competitors will surpass you and you will fail. So capital is needed to grow. Many cases, companies go from privately owned to publicly owned companies by issuing an IPO, stock in the market. They also go out and borrow money from the bond markets, from banks. And we'll talk about all these ways of obtaining capital in the markets. This is my high-tech video. What is management's objective in running a company? Well, in the top left corner, you can see management's primary responsibility is to maximize shareholder profits, maximize the value of the company. People are going to continue to lend you money. People are going to continue to buy your stock if you're providing adequate returns. If you're not, and you have bad credit, your capital will dry up and you will go bankrupt or have to sell the business. But there are other responsibilities for a company: ethical decisions, responsibility to society. These are also objectives that you have to take into consideration in meeting your objective of maximizing profits. So this manager is jumping up and down trying to see, what do I have to do to maximize my company? but also, am I ethical? Am I not polluting? Am I treating my employees fairly? Am I treating my community fairly? These are all issues involved in corporate finance. One of the key components of our class is to determine, okay, we want to start a business. We want to invest in new assets to create a product idea that we have. But where are we going to get the money and what is it going to cost us to get that money? The cost of capital. It's called the weighted average cost of capital based on the capital structure of your company. What is the capital structure of your company? The share of debt and equity in your business. What percent of your business is funded by debt? What percent of your business is funded by stockholder investment or profits that you retain? You can get this information from the balance sheet that your accountants put together every year. Thus, this leads us to our topic of next week, understanding financial statements. What do they tell us about a business? Many of you have taken accounting to take this class. Accounting is a prerequisite of this class. In accounting, you prepared through journal entries, trial balances, adjusting entries, closing entries. You prepared financial statements. What happened with the company? Now, in finance, we take what happened and what do we do with that information? How do we use it in the marketplace to obtain capital? How do we tell potential investors what we're going to be doing in the future? That's important. And what are the environment, the social, the political, the governmental, the international conditions that affect our company? That's also a very important characteristic. Look what's going on in the world these days over the last year and a half, 2 years. The pandemic, huge social and government policies and issues affecting our companies. How about the change in the United States in our presidency over the last year when we went from President Trump to President Biden? Huge change in the environment of our American world. All these are very important conditions to know that also affect our company and maximizing value. Not only the management of our business internally, but what's happening around the world and around our own environment. Tax laws, political issues, social issues, the exchange rates or the cost of currency between countries. All these affect the operations of our business. Chapter 2 talks about the financial markets, where we obtain the capital. Banks, stock markets, commodity exchanges. All these are institutions by which we go out and get our capital. The private and the public markets. Many startup businesses get financing capital from the private markets, hedge funds, venture capital funds, excuse me, private equity funds. These are all private sources of financing along with banks. And then the public markets for the larger institutions, stock markets, bond markets, and we'll be studying those directly in our third week of our class. Where are the physical locations of these markets? Some are located in New York City. Some are located in the key cities around the world, Tokyo, Beijing, Chicago, London, Berlin, all around the world. And many are located on the internet through digital trading and networks. We'll be looking at samples of this, where in one class, we'll be going to the marketplace online and purchasing a security. How does that work in today's world? We'll take a look at that. There it is. The Hundi, Benjamin Franklin. The United States currency is the most valuable currency in the world. Why? We have the largest economy in the world. Why? We have a democracy that's protected by the largest military in the world. Why? We have a fairly, this is debatable these days, a fairly stable government system. Why? We're the world's policemen. We watch over many countries and protect them. Why? Our culture is all around the world. You can be anywhere in the world and mention the names of Arnold Schwarzenegger, Taylor Swift, McDonald's hamburgers, Google, Microsoft, Apple, and people will know those products and those institutions and those people. Why? Because our culture is all over the world as well. That's what makes our dollar strong. And our dollar is always threatened by competition, threatened by social changes, threatened by other governments. This also plays a factor in finance. And we need to be aware of that, and we'll study it as well. I wake up every morning. First of all, I should explain to you and give you my background before I go any farther in this course. I apologize. I have been associated with the University. Again, my name is Rick Hasse. Hasse. Got it? Hasse. My name is Rick Hasse, and I have been associated with the University of Laverne for over 30 years. Also, during that time, I owned my own business. I was an investment banker. What's an investment banker? An investment banker goes out and finds capital for businesses, goes out and finds investment opportunities to investors to invest capital in businesses. That's what I did for years. While I was an investment banker, I also taught some classes at the University of Laverne, at UCLA, at USC, at the Claremont colleges. About 4 years ago, I sold my company to my employees, which was very nice. I sold the company to the employees and they took it over. They bought the business. And matter of fact, today they're doing a lot better than I ever did. So that's a nice thing. So once I sold my business, the University of Laverne asked me to become a full-time professor at the university to teach accounting and finance. And that's how I ended up here teaching this class to you this week. When I wake up every morning, I get up in the morning, make my wife her coffee, get the newspapers. That's another thing. You guys should read the Wall Street Journal while you're taking this class. Here it is right here, the Wall Street Journal. An excellent newspaper if you want to be a businesswoman or a businessman and know what's going on. Remember I said earlier, one of the key things to be a key manager or strategist is to know what's going on in the world around you. Wall Street Journal is a good way of doing that. If any of you are interested in getting a student subscription to the Wall Street Journal at a very reasonable price, let me know and I will hook you up. There's no money in it for me. I just know how to get that student subscription rate. But it's a good paper. I have been reading the Wall Street Journal for over 40 years. Kind of boring, but boy, it sure helped me in my business career. As I was saying, I get up every morning and make my wife her coffee, get the newspapers, and the next thing I do is I turn on CNBC Business Channel. And I read the newspaper and I look for these 9 indicators. And they tell me what's going on in the world around me. You probably are saying, why do you care, Mr. Hasse? You're retired. You sold your business. What do you need to do? Well, I'm still an investor. I'm still a teacher. I need to know what's going on in the world around me. The Dow Jones Industrial Index, the Standard & Poor's 500, the NASDAQ Index are the 3 leading market indicators of the equity and stock markets in America. The 10-year United States Treasury yield is the interest rate that the government pays on 10-year borrowings in the world markets. It's called the risk-free interest rate, the best credit in the world interest rate. That interest rate sets, as that interest rate goes up and down, it sets the prime lending rate, it sets automobile loan rates, it sets mortgage rates, it sets the rates of all other types of credit in America. The 10-year United States Treasury yield. Crude oil and gold, the two leading commodities in the world. Oil is the leading commodity in the world, becoming less so, but still a leading commodity in the world. And gold is a leading commodity in the world because it's considered a hedge against other types of investments by gold. And then the three leading currency indicators in the world. The euro to the United States dollar, the United States dollar to the Chinese yuan, and the United States dollar to the yen. Notice have these changed in this slide from 2019 to 2020. And notice where they are today at the close of the market on Monday, June 7th. Look at the Dow. Look at the S&P. Look at the NASDAQ. The equity markets are still crunching, burning, and churning. The United States Treasury yield has gone up, thus fueling the discussions of inflation. Oil is becoming to rise. Been buy any gasoline lately? Gold has stayed fairly consistent this year. The relationship of the dollar to the euro, to the Chinese yuan and the yen have fairly stabilized, but the yen has gotten a little bit less in value to the dollar this year, more so than the yuan and the euro. But these indicators are the equity, credit, commodity, and currency markets in the world. They set the standards. A lot of our investments are ruled by these indicators. If you're a businesswoman, a businessman, and you're going to be in finance, accounting, management, to be competitive in the world, you need to know what's going on in the world around you. I'm not saying you need to track these throughout our course, but you are going to track these three, Dow, the S&P, and the NASDAQ, in your portfolio work throughout our class. These tell us what's going on in the world, and very important to know. Because we have competitors. We have the Chinese. We have India. We have Europe. We have Africa, Asia, Australia, South America, all fighting for the same currency and capital, all fighting for capital markets, for product markets throughout the world, all dealing with social issues, governmental issues, security issues. This sets the stage for our class in corporate finance. It's not only the study of stocks and bonds, it's the study of the world around us. And that's what makes this class so good. It prepares you as you come out of your undergraduate program. It prepares you to be aware in business of all things involved with business, not just money, but governments, social issues that you need to be aware of. So this is what chapters 1 and 2 are about, just an introduction to these definitions. No real calculations, no real spreadsheets, nothing that. Just the study of the definitions of finance and the markets where we get our capital. Again, if you want to see this PowerPoint presentation, I'll be posting the video to our Blackboard site. Let me show you where I'm going to be putting that. Here's our Blackboard site. I tell students you should check in with this site every day during the course of the summer. I know that doesn't sound too exciting, but you should check in with this site every day for two reasons. Number one, to keep abreast of what I'm doing. When I send emails out, it goes to these course announcement areas. Here's my introduction video for the week. This is all the emails and correspondence I send you. To the Zoom and YouTube links, I will post this lecture to this link file folder, which links you to the lecture video. Every week, this is week 1. Also in the week video here's the PowerPoint that I just went over right here. Here's the introduction video. The link to our class session lecture will be here as well. Every week throughout the course, this will be the same every week. Introduction video, lecture video, assignments. Because in the course of our class, as it says in our schedule, if it's in yellow here, you have graded work to do. So this week, the discussion post. Next week, no graded work. Yahoo, you can relax. Then you have your first assignment, and so on. All due every Sunday. We'll also be doing something these first couple of weeks is I'll be meeting with each one of you individually for about 5 to 10 minutes on Zoom. I'll be posting a schedule at the end of the week where you can sign on to a date and time to meet with me. And this is important in online education because sometimes we don't pay attention to material in front of us. It's good to have somebody remind us about this. This is what this meeting's about, to make sure you're aware of what's going on in this class. This is where you just don't come to class and I spill out information and that's the end of it. This is a day in, day out workplace over the course of the summer. Because if you do that, you'll get an A. Trust me. If you do that, you'll learn. And many of the items we're going to talk about in this class, you'll be using for the rest of your life in business. Borrowing money, managing in stock investments, making strategic decisions about investing in a company, managing and supervising people, putting together presentations, papers, PowerPoints, videos. You'll be doing this for the rest of your life. So that's why this is important. So keep up to date with our reading, with our material. If you're running behind or have problems, that's why we have our Tuesday night sessions. Make sure your technology is good to handle all this material. Make sure you're familiar and know how to use Blackboard, and you'll do fine. But I'll meet with each one of you individually over the next couple weeks to just make sure you're cool with the course, your technology is working fine, and you know where everything is. Then it's up to me to teach it. All right? Fair enough? Cool. You have a discussion forum this week. What's a discussion forum? It's your class participation grade, which makes up 20% of the grade of this class. During the course of our 10 weeks, you'll be putting together some discussion forums, some work that you'll be part of our class participation grade. This work this week is worth 5% of that 20% of your class participation grade. It's for me to make sure you know how to use Blackboard and can post files and information to Blackboard. It also tells me a little bit about yourself. And it also tells me about your ability to create a spreadsheet and to find data and track it during the course of our class. Your first job out of college will be with a company, and you'll probably do what is called, and I'm not demeaning this at all, but you'll be doing gopher work. You'll be doing basic management work, spreadsheets, analysis. You won't be supervising people. You won't be making strategic decisions. You'll be getting experience and knowing what the company is all about. Your ability to present, your ability to put information into computer technology, spreadsheets, and the like is key for your growth in the corporate world. We're doing it in this class. So tell me a little bit about yourself and put together your portfolio. I've already put a sample together here of me. Here's Professor Hassey's forum. There's my bio. Cool. Here's my stock selections. These are the companies I'm going to be investing over the course of our semester. And naturally, as I ask in this posting, I want you to briefly explain to me why you picked your companies and how much you plan on investing your $100,000 in. And here's my arrangement. There's Professor Hassey himself, looking rather fit and fiddle on a golf course, where I am most of the time besides being on Zoom. So that's a sample of what I'll be looking for in your post. Additionally, you'll be posting and attaching a file. That file is your portfolio in a spreadsheet, not a PDF. I'm giving you a PDF file as a sample because I don't want to show you the formulas used in that, because I want you to do the formulas yourself. That's why I'm giving you a PDF file. But I need you to produce and post, attached to this forum, a spreadsheet file, be it Excel, be it Mac numbers, be it Google Sheets, some type of spreadsheet, not a PDF. And this is what that PDF sample looks like. Here are those 4 stocks I just showed you. Oh, excuse me. A couple of stocks have changed, but this is just a sample, so don't worry about it. I picked 4 stocks. I each invested $25,000. I gave the ticker symbol. The ticker symbol is the symbol that is their representation in the market. The exchange at which that stock is traded on. The date of the purchase of the stock, which is this Friday, June 11th. Naturally, this hasn't happened yet, but I put the date down anyways. The United States stock markets open at 6:30 in the morning Pacific time and close at 1 p.m. in the afternoon Pacific time. That's 9:30 in New York and 4 o'clock in New York. The markets close at 1 p.m. At the close of the market on Friday, June 11th, I want you to get the closing price of your company's stocks. Now, you don't have to invest in 4 companies. You can invest in 1, 2, 3, 4. You can invest up to 5 companies. And that investment is going to be spread out over your allocation of $100,000. You make the determination. And once you make that determination and you find the closing stock price on Friday, June 11th, and you put it into this spreadsheet, then what you're going to do is you're going to determine how many shares you're going to be buying of that stock. So you're going to take the price and divide it into your investment. And that's how you get this number. Dividing the price into the dollars invested and getting the number of shares. And naturally, you're going to round this to the nearest whole number. I don't want to see decimal points here. Too confusing. Now, in the real world, it doesn't work that way. In the real world, you give your stockbroker, or you go to Robinhood or wherever, and you put down $25,000, and they'll invest and try to find a price of your stock, and buy as many shares as they can of not at 25,000 because they're going to be taking a commission out of that amount, their fee for doing that work for you. So less the commission is how much money you'll invest. But since this is a example of the real world, we don't have to pay any commissions. You're welcome to pay me if you'd like, but you don't have to. So we're just going to take the closing price on June 11th and dividing it into the amount of your investment. You could just invest in one stock for $100,000. You make the determination. I want to see in this column here the formula taking this number and dividing it by this number to get this number. That's why you need to show me your spreadsheet so I can see this calculation. You're also going to find the market indexes at the close of business this Friday. The Dow Jones Industrial Index, the S&P 500 Index, and the NASDAQ Index. Over the first 3 weeks of our course, in our Blackboard week site, I have definitions of these 3 indexes and what they represent. Review those. Because what we're going to be doing in the course of our class this summer is tracking these numbers at about 3 or 4 times during the summer and seeing how these prices have changed over the course of the summer and compare them on how the overall markets are doing. Are we beating the markets, or are the markets doing better than we are in our stock selection? That's important. When you invest in your 401k at your employee, when you buy a IRA fund and invest it in the stocks, you're trying to select stocks that are going to outperform the market, do better. That's one of the reasons why we invest, to do better than the market. If the market does well, we better do well as well. So this is what I want your spreadsheet to look like. Now, where do I find these prices, Mr. Hasse? Well, the simplest way is to go to what is called Yahoo Finance. Now, there's so many ways of doing this, but I found for students, the easiest way is to go to Yahoo Finance. So let me bring that up here. So you go to your browser and type in Yahoo Finance, and here it is. This is Yahoo Finance. So at the close of business on Friday, or you can do this over the weekend, next weekend, and let's say you decided to pick, let's pick a good one, Tesla, which is a lot of people pick these days. You just type in Tesla in the search window and up will come, the very first number is Tesla. That's the TSLA, that's their ticker symbol. And you would click on Tesla and you'll go and up you will see the ending price of Friday of Tesla. Today, Tesla, this is Tuesday, June 8th, Tesla closed at $603.59 at 1 o'clock Pacific time today. That's the closing price. If this was Friday, that would be your price in your portfolio, $603.59. That's the closing price. All right. Now over here, they give the after hours trading. Trading is done and orders are taken even when the markets are closed, but you're not concerned about that. You're just concerned with the market close. And if you go here, if let's say you're doing this on Saturday or Sunday, you can click on historical data and it'll give you the prior prices of all the days of Tesla. Here's today's price, 603.59. Here's yesterday's. Ooh, Tesla went down today. Not good. But it had a nice rally this week from last week. This is where you can confirm those prices every day. So that's Tesla. And you would do this for every company. Now, you can only invest in publicly traded corporations. You cannot buy commodities. You cannot buy mutual funds. You cannot buy ETFs. You cannot buy options. None of that. Just straight stock purchases of publicly traded companies. And don't buy them on the Beijing Exchange, the Tokyo Exchange, the London Exchange. Buy them on the New York Stock Exchange or the NASDAQ Exchange, please. This gives me an easier opportunity to track them and make sure you're doing this correctly. So that's what you do. So let's say you pick a second stock like Apple. Type in Apple. There it is, right at the top of the list, AAPL. Click on that. Apple today closed at $126.74. Was up a little bit today. That would be your price of your purchase. And then you would take that amount, 126.74, and divide it into the amount of the $100,000 you're investing in Apple, round to the nearest whole number, and that would be your number of shares you're purchasing. Because why the number of shares you're purchasing is important, because as the stock price trades or changes over time, you would take those new stock prices and multiply it by the original shares you purchased to determine whether you're making or losing money. Once you pick your stocks this week, you cannot go in and change them. You're stuck with them for 10 weeks. You're stuck with them. Sorry. And also, we're going to be doing some other work on your portfolio. We're going to be looking at the financial statements of your companies. We'll be looking at why we think those stocks are going up or down. What has the company disclosed? During the course of our summer term will be the second quarter financial results of these companies. June 30th. We'll get to see how they affect the stock prices this summer. So this is going to add a whole nother layer of our analysis for corporate finance. Your stock portfolio is part of your discussion post for this week. It's due Sunday evening by midnight. A spreadsheet file attached to your discussion forum. No email, no PDFs, everything in Blackboard folder that you create. That's easy for me. I have 125 students this summer, and to keep it as simple as possible for where I can find your work makes it a lot easier for me to get your grades to you quicker. I try to get the grades to you on an assignment within 48 hours after the assignment is closed. So you post Sunday night, my job is to get those grades to you by Tuesday. And it makes my job easier to do that grading if I know exactly where all those files are. I think you can understand that. So if you have questions over the next few days, go ahead and ask me. Don't send me samples of your portfolio to make sure it's okay. That ain't going to work. You guys can figure it out for yourself. Here's the sample format, but you need to put this into a spreadsheet so I can see your calculations of the shares. I can see your summing up of this number. I want to see that in a spreadsheet. Okay. Well, I think that pretty well covers this first week. The definition of finance, corporate finance, the definition of the financial markets. If any of you want to review some problems that are about these definitions, I have allocated chapters 1 and 2 in our text, the 10th edition of Fundamentals of Corporate Finance. These problems, if you'd like to do them, but they're not required, I will not look at them for a grade. I will post the solutions to Blackboard if you want to look at them. But these are just problems that are good practice. You don't have to do them. They're not for a grade. Your graded work this week is your discussion forum. These problems are just samples that you can review and make sure you understand the material. You don't have to do them, so don't worry about that. I just provide them. Sometimes students like to look over a few problems, make sure they're on the right track. Next week, we're going to be talking about Chapter 3, Financial Statements, Chapter 4, Financial Statement Analysis, all key parts of corporate finance. So that concludes my first week lecture. Pretty easy. It gets a little bit longer, trust me, as we move along in the class, but this week it's pretty short and simple. Again, I'm available at any time for questions. Make sure if you do not understand what's going on, you let me know. Don't wait to the third week after you get an F on your first assignment and say, Mr. Hassey, I didn't know I was supposed to do it that way. If you do not know what I'm doing now, ask now, please. I don't have anything else to do this summer except help you. And I can even answer these questions on the golf course anyways. But I'm looking forward to working with you. This is a great class to learn about corporate finance. And I hope you take advantage of it. I know it's summer. I know it's Zoom. But if you go at it with a good attitude, you'll get a lot out of this course. Trust me. We have students from our main Laverne campus. We have students from the online campus. We have students from our Kappa program. We have students from our Burbank regional campus. And we even have one graduate student in our class as well. So we have a great mix of students. We have 27, 26 students in our class, which is a full class. Let's take advantage of this opportunity to learn about corporate finance in a fun and hopefully relaxing environment. All right, everybody. The next time you'll see me is in my introduction video on this coming weekend for week 2. Again, next week we'll have a lecture video, probably on Monday next week because I'm getting a little bit more organized this week. And you have your discussion post graded work due Sunday evening. I stand ready to help you in any way I can. Have a great rest of the week. Be well, wear your mask, and we'll see you all down the line on the internet. Adios, everybody. Take care.